Hey traders, Nick Shaheen here, looking at the the retail ETF, XRT specific. All right, so the retail sector just completely got shellacked recently. Not all for its own mistakes, but because of we had a general market rout. So I'm looking at least 10-15% drop eyeball. And shame because it had a nice setup, which I can definitely erase now, right here, which was a pivotal point, and somebody could have played it upwards. So now what? Right. So today it's up 2%, but the whole market is up 2%. So I was asked, what's the stock look like? Well, a few days ago, it looked like it was going to find support. I'm going to mark it up. All right, so let's do that. Let's do a whiteboard. All right, so this zone right here, I identified as special because it was just above that one, and it looked like the bulls were holding it at support. Even better, they created a new one up there, kind of similar to it, but then they flagged out of it and fell. I knew that as soon as we lost this one, we had some downside. They exceeded my expectations because they sliced through both zones quickly. I can't remember what happened here, but probably something. It was high volume too, so it was the October correction, perhaps. Yeah, that's probably what it was. And then everybody loved them, and they found support, and that's part of the thesis today. So support, not surprising where it found support, because this was the neckline from which they broke out. So they fought over it before. That's what they call consolidation. These are months, so it's about a year's worth of data right there. So it's relatively good consolidation period. And those are usually support. So I'm going to put a giant S in it, right? So they fell to it and they bounced right off it. Perfect. Support worked. And then something happened here, which I bet you there was earnings, and Macy's for some reason sticks out. I don't track each individual stock. I'm looking at this chart. This could be whatever. In this case, it's retail, but it could be any other chart. And then they came back to it and then sliced through it like butter. That is surprising. And they went exactly to the bottom end of it. So, I said if we lose this neckline, I drew this red line, and they came to it real quickly. I'm surprised at the speed at which they got to it. So what now? So now this beautiful support might become beautiful resistance because they're below it. So now onus is on the bulls to say this was a complete mistake. Sorry about that, fat finger, etc., whatever. Let me take it right back. So if they don't bounce right back, this beautiful support is going to probably be resistance. So meaning if I was to trade something long today, this would not be it. Let me zoom out to a weekly chart so to show a less noisy picture. Very violent sector. That's why I don't like to trade it a lot. The XRT itself, first of all, when you trade an ETF, you should look at what's in it. I looked at it. It's a whole bunch of stuff, nothing more than 1% at a time. Even Walmart's in there. It's like an equal weighted almost average. So it looks like that there's not one company that can move it this way or another. Like some transportation sectors are heavy with UPS and FedEx and whatever. So in this case, no, it's a nice distribution, but they move in sync, it looks like. So that's the same red line and the same downside and the same pivot point. So now it doesn't look like a consolidation period. It looks like a pivot point. See, that's why we look at different time frames. First I was on the daily, and now I'm on a weekly. And now we're talking a lot, 5 years worth of data. And that beautiful support zone that I said was well consolidated, now it becomes the clearer picture. It's not necessarily a support zone. It's been a pivot point. If you look at it, it's red-blue. That is just the regression line. So reverting to the mean, you hear that. That's what it's doing. They overshoot. They come back to it. Overshoot. They come back to it. They try to overshoot, then overshoot. So everything is happening around this. So this, to me, not a clear point of entry for the XRT. If I want to bet long on the XRT, I'd rather bet long on the markets in general, because if the markets are moving, if the XRT is moving higher, the markets are moving higher. They're not going to rally all by themselves. So I would not chase it all by itself. Furthermore, I just broke it down to smaller increments of time. Now we're talking 4 hours at a time. I would want to see, today's bounce is great, but I would want to see at least, try to recapture the highs of the candles they just set. So today's exuberance was 45.13. I'd like to see it above that. I'm not chasing it. This would be the last thing I chase. Onus is on the bulls to show that they can retake this line. This is the short-term line from which they fell. That's the accident scene. Can they get to it? And if they get to it, is it going to be resistance? So if I'm long on a bounce from yesterday, this would be my exit point zone. Why? Because I want to book it around 46 and then see if they can redo it going forward. So onus is on the bulls to retake this zone and then keep it. So if I'm long, I'd exit and wait to see if they can keep it or spread it or something. All right, so this applies to any chart. And if you have any questions, let me know. I usually play it via the options. I can sell puts, put spreads, I can buy calls. I don't like to sell naked puts in something I don't believe in. And given what I saw on the 5-year, I don't want to sell naked puts in this one. If anything, I'd sell put spreads. But if I do my homework on retail and I know the retail sector inside and out, maybe I change my mind. But at this point, I don't. So play it cautiously. Also, I'm looking at this. If this is an inverse cup and handle that just broke around here, I put this thin line, short line I should say, because I usually look left and say where they're going to stop. But technically, this is a cup and handle inverse, and if this is the neckline, the amount of drop should be as long as this. So what is that? 51 to 45, so $6. So there should be $6 on the downside from here. So 40, we haven't fulfilled it. So we have a few more bucks to go. So this would be the eyeball target for it. I'm not calling for it, but I'm saying technically, if I drew it correctly, that's probably where they take it. Somebody who's better at me than who's better at the technical analysis, at least drawing with a thin line. I like to use a big crayon. This way I make fewer mistakes. All right, next signing out. If you have any questions, let me know.